Louise Bedford here. I'm your host of the Talking Trading Show. This is how traders excel. Now, I have to say that a lot of people think that once you know how to trade one market, you are stuck in that market and you can never budge from that market. But I can tell you that my firstborn child has started trading cards using technical analysis. Now, they're fantasy figures that look like this. There's posters and there's cards. They're beautiful. They're absolutely gorgeous. And some of these cards range between $20 and $200,000. So I've watched my kid watch me. This child has never known parents who haven't been in the home working on technical analysis, and my husband does property development. So already the entrepreneurial spirit is born. However, I never knew this was even possible, looking at the prices of the cards, applying a moving average and using that to trigger entry and exit has been applied to a market that I had no idea even existed. So that's why this podcast is so important. You are building the skills. You are doing what it takes to get what you want in life so that you can do more and be more and have more. So this is why I've invited a lovely new friend of mine onto the show, Mr. George Fokas. I'll introduce you in just a moment, George. But isn't that interesting about Ramona, my eldest, trading using technical analysis, using a completely different market that neither of us have been introduced to?
No, a technical analysis can be applied anywhere in any market. It's not just realistically, people just think it's the stock market. It's not. It can be applied as long as you understand technical analysis, you can apply it anywhere.
That's it. So this week on Talking Trading, George and I are going to talk about creating a monthly income. Now, a lot of you, if you've been hanging around with me for a long time, you'll know that I wrote this book, The Secret of Writing Options. This was my first book. Oh my gosh, my little baby. I was so happy when it arrived. I literally gave it a hug and then wrote the Candlesticks book straight away. So this book has really kicked off for a lot of people the world of options. And George, this is your world, isn't it?
It sure is, over 24 years for me. And I have to say, Louise, you are one of my idols because you started and your book helped me get into the world. So the world of writing options. So I'm grateful for that. And to have this opportunity just over 24 years later, it's amazing. Thank you.
Oh, George, it's so much fun talking about options because they are interesting little creatures. And if you haven't had a chance to trade options yet, I want you to keep your mind open. There are aspects that George will go into today. Even if you don't fully grasp it, we're going to give you the ability to check about how to do it later. So don't freak out. Don't do it, oh, this is too hard. Just get ready to be open-minded and absorb everything that George and I are going to say. Now, George, I want to talk a little bit about your background, and then I want you to fill in the gaps. Not only are you a self-made millionaire and wealth creator, but you also teach other people how to do it, which I love because it gets really boring just being a trader. So that entrepreneurial spirit is deep within you, which I love. Now, gosh, I'm hearing here and reading that you started at the age of 28, which is great. And you sought passive income opportunities. Now, that is the utopian dream, isn't it? That absolutely. I think that's what a lot of people are looking for. There are no consistent returns to be found in the stock market other than a few limited strategies. And I know you've spent your life pursuing those and really delving into those. So what things have I missed out from your background, George?
Well, a couple of things I'll just correct there. I actually retired at the age of 28.
You retired at 28?
At the
you were
age of
just
30,
a baby.
I fully retired. Yes, yes. So it took me 3 years. 25 is when I started at the options market. And 3 years later, at the age of 28, I semi-retired. And at the age of 30, I fully retired. And as you said, life is boring when you're at home making money. and money's working for you and you've got nothing else to do because you're at home and all your family and friends are working and it's a weekday and there's only so many cars you can wash and grass you can cut and do all that sort of stuff. So I decided to get out into the world and pay it forward and help others. So from the age of 30, the last 18 years, I'm 48. So there you go. Now you know my age. I've been teaching all around the world how to
That's
build
just
wealth
awesome.
and how to earn a monthly income and how to have money work for you. Passive income exceeding active income is critical.
I like that because really we are all working so hard these days. Bosses are making unreasonable demands. We're putting in longer hours than ever. Our home life and our work life has suddenly merged. It is just like it has leaked all over the place. This work thing, hasn't it? So we
Correct.
do need to remember that the goal of trading is to enjoy ourselves and to spend time with the people that we love. So I'm really enjoying that aspect of us getting to know each other, George.
Yeah.
I think our list of shared values is very high. Now, for those of us in the audience that don't know about options, could you just give me a bit of an idea about, in general terms, your covered call strategy?
So the strategy that I was taught multiple strategies when I first started investing because I was looking for ways to build wealth. I was looking for ways to have my money working for me. I was sick and tired of being sick and tired. And growing up, my parents were working for their money and I wanted to do something different. So you could say I was the black sheep of the family. So I delved into various different strategies and I won't go into it as much, but it didn't work for me. And, a lot of people try things and they get disheartened. And the one strategy that changed my life over the last 24 years is the covered call strategy. So covered calls is as simple as we buy some shares in the market and then we write options over those shares. Now, an option is as simple as we're giving somebody in the market the right to buy these parcel of shares that we own at a future date at an agreed price. And the person who's buying that option to agree to buy our shares in a future date at a future price, they pay what we call a premium. And we'll talk a bit more about that later on. We'll get into the nitty gritty. But what people need to understand is in Australia, so many people and all around the world, so many people hold shares and they do nothing with them. Whereas they could be using those parcel of shares to earn income on a monthly basis off those shares. And the biggest thing, and we will delve into this more later, is whether the market goes up or whether the market goes down, implementing the covered call strategy gives us cash flow and gives us income on a monthly basis, which is what people are looking for in this day and age. We can't rely on our jobs. There is no job security. We need to build multiple streams of income. And so how do we get our money working better for us? And I found with the different strategies that I applied, the covered call strategy was the one that was most consistent for me.
I loved it too. I'm not doing this as much in the Australian market anymore, George, because they changed things as time went on. Since
Correct.
I wrote the book, I mean, really, this book is still relevant for traders, there's no doubt. But the difference is they altered quite a few aspects
Correct.
since that book.
Absolutely.
Yeah, like one contract used to be 1,000 shares and now it's 100 shares in the Australian market. But that wouldn't even matter except for volume in the Australian market has dried up with
Correct.
options. I found that I couldn't get set, I couldn't get out, and it was starting to really drive me around the bend because we've got these market makers that are like an intermediary between us and the market, and they seemed to sense blood in the water with me. I'm sure it's not just me being paranoid. So I want you to comment on a little bit more about market makers, how they work,
Yeah.
and why you're choosing to focus on options, whether this is just Australian options that you're looking at or other
Okay.
types of options and nationalities of options, because that's the part that I'm really keen on hearing.
Well, I mean, we've mentioned a few times Australia, but this is global. I'm a global investor. I travel around the world. The biggest thing for me right now is to teach my students and my clients all around the world lifestyle. Money working for you to have that lifestyle because that's what we want. It doesn't matter where you're born. You don't need to be there. You don't need to stay there. The world is our oyster and we can be anywhere we want. So people really need to understand is when it comes to understanding, and you talked about your book and the Australian market has dwindled. I've been investing in the US market since 2003. It is the biggest market in the world, irrespective of what happens globally, whether there's, economic crises around the world, whether there's wars, whatever there is, it doesn't matter because the markets will always trade, the markets will always be there, and money can be made. So it doesn't matter about external factors. And so people don't understand because the society teaches us to trade, to play the game. And that's what most people do. So the biggest thing I teach, Louise, is 95% of people trade the markets. They put money into the markets and they play their money on the hope to make a return at the end of their transaction. Now, we talked about market makers, and people don't understand there's two sides to the coin. Most people only understand one side. And this is why a lot of people have fear when it comes to investing, because one, they're not knowledgeable. They don't have the education to understand how to invest. They know people out there are making money, but most people are too scared to understand how to do it. So people only understand one side of the market, the 95 percenters. But on the other side of the coin, the 5% of people who are what I call the market makers, the creators of the market, they create the market, meaning they put money into the market to be able to create the market, but they get a return paid into their account for creating and being a market maker. Now, if I can pause for a second and get you to understand this, we are taught to put money into investments, whether it's the stock market, whether it's property, whether it's multi-level marketing, whether it's business, whatever it is. We are taught in society, work hard, save some money, put your money into an investment, and if you get that investment right, you will make a return at the end. Most people are scared to put money into investments, and they think, George, Louise, the safest thing for me is to put money into the bank, into a term deposit. Now, if you put money into the bank and into a term deposit, when do you see your return off that money? At the end. We work for our money, we get paid at the end. You've got to put time in before you get your return on your time. Money in the markets, 95% of people, they put money in hoping to get a return at the end. So market makers, they hope, that's right. Market makers, this is the biggest thing you need to understand when it comes to the covered call strategy. And for a lot of people, they're going to go, no way, Louise, no way, George, this is BS. But please understand what I'm about to tell you is the kicker that you're going to go, wow, I didn't know this. People who create the markets, I've been creating the markets for over 24 years. Market makers, creators get paid a return on investment from day one upfront, irrespective of what the markets are going to do in the future. We see our profit, our income, our cash flow paid at the beginning of our transaction, not at the end. And the biggest thing most people are looking for right now is money working for them. They don't want capital gain. They don't want capital growth because you can't live off that. You can't eat off that. You can eat off cash flow. And so the covered call strategy has allowed me and thousands of my members around the world to generate income from day one from the markets, and whatever the market does in the future, we've still been paid. We've made money from day one. And that's the biggest thing. And that's what people are looking for. So a market maker sees their profit paid into their account at the beginning of their transaction. Traders see their profit, hopefully, at the end of their transaction. There's a big difference. So just if I can elaborate, who are market makers? Because people say, George, I've never heard of this. Louise, I've never heard of this. Market makers, in fact, I'll ask you this, banks. If I ask people around the world, do banks all around the world make a hell of a lot of money every year? I'm pretty sure everyone would say, absolutely, they make money. So who creates the markets? Who is the market maker? Our banks. Stock brokers are a market maker, and they create the markets. Now, stockbrokers want their clients to be traders because brokers are in business for traders to trade for them to make money. So banks are market makers, brokers are market makers, fund managers are market makers, large corporations are market makers, institutional investors are market makers, and people like you and me.
Loving it. And do you know the thing that I find with this global thought process is that some people limit themselves because they think that I'm going to have to stay awake all night. How am I going to fit this into my life when I've got already a busy life? I've got a job. What do you say to people who are struggling with that thought process?
Thank you. The biggest thing people need to understand, Louise, is this. When you're creating the market and when you are a market maker, you make your profit, you earn your income at the beginning of your transaction. Whatever the market does over a period of time, whether you watch the markets every day or whether you watch the markets once for the month or once for a quarter or once for a week, you've still made money. So people need to realize and understand we do not watch the markets. We do not need to watch the markets. If I can give you this analogy, this has nothing to do with property, but just to help people understand, and this is what I use when I teach all around the world, is this. If you bought a house as an investment and you start renting that house out for income, you have an agreement in place with the tenant, a contract. That contract has a set time as to how long that contract is for. It's a 6-month lease. It's a 12-month lease. And in that lease, it has an amount that that tenant has to pay you, $300, $500, $600 per week. So you have your house as an investment and you have a contract in place that says to the tenant, they have a contract in place for the next 6 months. They have to pay X amount, and that's the agreement. If we drive past that house every day to look at that house, or if we drive past that house once a year, does the tenant still pay us rent?
Yeah.
Hopefully, right? They don't default. So whether we watch that house every day or whether we watch it once a year, the tenant has an agreement to pay us per week a rental income. Does that make sense?
When I first got involved with any property investing, I mean, my husband does do this for us and I don't really pay much attention. But to begin with, I was driving past that house every day, George, every day, because I wanted my finger on the pulse. Do you know what difference that made to our capital gains? Zero. Zero difference. Whether I went past twice a day, it would make no difference. So this is interesting to me, though, because there are some things that can go wrong with these types of trades. So how do you catch those things early enough? And what do you do when things go wrong with that trade?
Okay, so this is the one thing that people need to understand that I love about the covered call strategy. I've bought my shares. People buy their house. I've bought my shares. I have a contract in place, and that contract has an agreed price, it has a set term, and it has a premium that I've received. And so my contract that I put on my shares is, let's just use an easy example. Let's just say it's a contract for a month. So the person who bought that contract has paid me a premium upfront from day one. So I've made a return on that investment on my shares. During that month, those shares can go up, but those shares can go down. And during that month, if I sit and watch those shares every single day, there is absolutely nothing I can do until the end of that month, end of that contract. So as you say, things can go wrong and the stock can go down, the markets can go down. And the biggest thing we need to do is we need to wait and we need to build patience. See, a lot of people don't have patience. And I'm sure you all agree. And the one key thing that I teach my students all around the world over the last 18 years, in fact, it's two things. Slow and steady wins the race. This is not a sprint sport. We need to be in it to win it, but it's not an overnight success. I'm not going to get into the markets and make $1 million in one transaction. This is not going to happen.
Damn.
Slow and steady wins the race.
Yeah.
And the second thing is this. Patience. We need to have patience because people are so impatient. And so the biggest thing I teach is you need to have patience. And once you've got patience, you've got money in your bank account that you can use to either reinvest, pay down your home loan, pay down your car, live off it, pay for your fuel, pay for your groceries. And when my students all around the world see that money banked into their account from day one and they finally see something work, they build confidence because something is finally working for them. So as you mentioned, things can go wrong. Nothing works perfectly 100% of the time. But when you understand the strategy, we understand that over a time frame, the markets can go up and they can go down, and we just have to be patient. But at the end of that contract period, should the markets go down, it is important to have all the pieces of the puzzle to know what to do, when to do it, and how to do it. And this is why I'm sure you will agree, Louise, and this is your expertise. You have the books, you have the knowledge, you have the mentoring program, you have that coaching, and you've helped fast track so many thousands of people around the world succeed. It's because you've got all the pieces of the puzzle. See, a lot of people think they can fast track and they can cut corners. Go to Uncle Google, go to YouTube, do all these sort of things without investing in themselves. And this is where people fail, because they're not willing to put money into themselves and invest in themselves to educate and have the right education and the right knowledge and the right tools from day one.
Oh my gosh, I'm so hearing you. I would have loved to have access to this type of information when I started trading. It was like some sort of wilderness. It was literally tumbleweeds rolling through the stock exchange, George. I used to go to the stock exchange in my lunch break because I had a real job back then, and I'd stand looking at the ticker and I'd wait until my shares came up. Oh, look, there's Qantas. Oh, look, there's Ross Mining. Oh, there's Wesfarmers. And I'd be very excited. And I'd look down the line of all these men in navy blue suits with red ties. And across to my right, there was also a whole heap of men in navy blue suits with red ties. And what in the hell were we doing? We weren't really building our intellect, our knowledge about how to trade. It felt more like a slot machine rather than a regulated, specific approach following a trading plan. And this is the thing that I think where you and I bond. Sure, I'm not talking that much about options these days, admittedly, which is why it's great to have our friendship.
Yep.
But there are the two halves here. We've got the income and the cash flow, which is needed so that we can live and eat. Then we also have the wealth creation part, which is the longer term, medium term view where we're following a trend for a long period of time. These two strategies can work hand in hand. They are not mutually exclusive. In the Venn diagram, there is a hell of a lot of overlap between what you're saying and what I'm saying. So everybody listening, just know that there is overlap here and look for the similarities in what we are saying. Try to emphasize those similarities because good traders do the same thing as each other. It's surprising. There are commonalities here, and that's what you want to hit in terms of that top note. Now, George, I want to talk about, because I'll be open with you, I am, just as you are a podcast virgin, congratulations on being on your first podcast, and thank you for trusting me to interview you, because I know our trust is very deep, and for you to come on the show means a lot. So I am actually a US options virgin. I have barely done any US options. I left that behind. I traded options to the exclusion of all else when I left my job because I liked that monthly income. And then I moved on to other strategies as well as the Australian market started to not be optimal for that particular vehicle. So tell me about the differences between the Australian market and the US market in terms of options.
So just so you can understand, I started the Australian market in late 1999.
Okay. So I'd been going for a few years then, and it was still probably good then, actually, just thinking back. I think it was about 2001 that things started to flip for me, and I had to get into other vehicles.
Yes. So 1999 is when I started in the Australian market. I moved over to the US market in early 2000. I'll tell you why, and I've been in the US market ever since. And we'll talk a little bit about the US market, but just people need to understand what the difference also. So forgive me, I'm going to be jumping because my mind's running a million miles an hour. There's so much information I want to give you. So I started on the Australian market and I went over to the US market shortly after because I realized, and in fact, one of my mentors pushed me to go to the US market because I was scared of the US market because I was in Australia. I said, I know the Australian market, just like yourself, watching the ticker, going to the ASX. I'm in Sydney, going down to Bridge Street and having a look at the ASX and the markets and doing all that and where the stock exchange is. So I used to have a pager that used to,
I had a
pager,
a little orange pager.
Vibrate and beep.
Same. I just thought I'd hit some sort of level of trading goddess at that stage when I got that pager.
But isn't it amazing that we had this, I'll talk personally here. I had this ego that I thought I was going to be a rich in a year. I was going to be a millionaire, all this sort of stuff. But the biggest thing I didn't have, or two biggest things I didn't have is a knowledge and education and a mentor to help me fast track my success. So, oops, I don't know where they came from, but there's these balloons. But anyway, so I realized, and in fact, I was pushed to go to the US market because it was a bigger market. And in fact, right now, I can tell you the US market is the biggest market in the world. It makes up over 86% of global markets. A lot of people are scared of the US market, just like I was, because I used to say, and people say to me, George, I don't know the US market. It's over there. I'm over here. I'm in Europe. I'm in Asia. I'm in Australia. I don't know the US market. But education and knowledge teaches you the US market, and then you understand it. Because whether we invest in Australia, whether we invest and do this in India, or whether we do this in the UK, which you can, or whether we do this in the US, we're looking for the best return on investment. We want our money working for us. In the US market, there are over 4,000 companies that we can apply this strategy to. In Australia, it's just over 100. It's actually 115 to be exact.
There is, but really, when you look at liquidity, the open interest, the liquidity, exactly. You and I are akin here. You really only have about 9 in Australia that you can choose from. So it is so limited, and it knocked me out.
Yes. So the US market is the biggest market, and the biggest thing people are looking for is flexibility. So we are global investors. I travel the world 4 months of the year. I'm on holidays with my family. I am in Europe. I'm in America. I'm in Hawaii. I can click my buttons on a computer anywhere, and I can invest in the US market, and my money works for me. But here is the biggest thing that I realized that changed my opinion with the US market and why I moved over there. If I'm going to implement and put the time in to understand and apply the covered call strategy in the Australian market, for example, it's going to take me a certain time. And in fact, if I can actually just mention this, and for a lot of people, they're going to go, no way, but this is the time it takes, and I'm more than happy to prove this. It takes my clients and my students and myself 10 minutes to click 10 buttons on a computer. We are in the market and we've made a return on investment. 10 minutes to click 10 buttons. Now, if I'm going to allocate those 10 minutes and those 10 buttons and do it on the Australian market to hopefully get into the market because of liquidity and low liquidity, which means there's not a lot of players, and earn a small return, I'd rather put that 10 minutes to click those 10 buttons on the US market and get a better return. And in fact, let me explain this to you. In the US market, I can double, even triple my returns compared to the Australian market for the same time and effort. So that's a no-brainer for me to have my money working for me.
Yeah, but there are some differences between the Australian options and the US options in how they're exercised, isn't there?
No, the Australian and the American market uses the same American style options. In Europe, we use what we call European style options. So in Australia and America, the American style options can be what we call exercised. They can be taken up. So the option trader can exercise their rights at any stage throughout the contract period. European style options is what they use in Europe, can only be exercised on the contract expiry date at the end of the contract period.
So the money that you're capturing at the start of the trade, it's not really yours to keep until that option has expired, though, isn't it?
No, it is yours to keep.
It's yours to keep? Tell me more about that, because
Okay.
I never thought of that as my money to keep, because until that contract was done, I felt that it was still at risk. It was still a situation of flux. So I need to hear more about that.
Okay. When we go into the market and we enter a covered call position, we are buying a parcel of shares, and then we are creating a contract over those shares. We're creating an option over those shares. The person who's buying the contract is buying the right to buy your shares. So please understand this. You've bought a parcel of shares, and let's just use as an example, we're going to use Microsoft. You buy some Microsoft shares. You haven't bought them because you love them. And this is the biggest thing people need to understand. When we are investing, please make sure there is no emotion when you are investing, because when you get emotional, you tend to make the wrong decisions. We need to keep you emotional neutral. Very, very important. We are investing to make your hard-earned money work for you. You are buying a parcel of shares, and then you're putting a contract on those shares that says you are agreeing to sell your shares. So we're not buying them because we love them. We're buying them to make money off them. And the contract says we are agreeing to sell our shares at a future date at an agreed price. And the person who's buying that contract that you have created that wants to buy your shares and wants to have the right to buy your shares at a future date, they pay immediately from day one what we call a premium to lock this agreement in place. So the person on the other end, the 95%ers, the traders in the market, are paying a premium into your bank account from day one. That premium is yours, 100% yours from day one. You can do whatever you want with that. You have to wait until the end of the month. That is it. So that money is yours to keep. You do not have to give that money back.
What about if that share drops? So what about the capital loss that you can face in that share dropping compared to the level of the premium that you've captured?
So, Louise, I need to educate you more.
This is why you're here, my friend.
Fantastic. And I appreciate the fact that you're asking these questions. Let me explain. Okay, can I use a totally different analogy just so people can understand? Because and I'm sure you'll agree, when it comes to stock market and investing, a lot of people switch off because they're scared.
Yeah.
They're scared. They've been conditioned and they're scared. So let me talk property for example. Now, this strategy, covered calls and the stock market has nothing to do with property, but can we just talk property and then I'll relay it back into the stock market if that's okay?
Let's do it.
When you buy a property as an investment, you go out, and I'm just going to use an easy round number. Let's just say $1 million. You buy a property for $1 million, and most people don't have $1 million, but they've saved 100 or 200,000, and that's their deposit to buy that $1 million house. So your money, your deposit is in that property, and you leverage. You get a loan. The bank gives you the difference. You buy this $1 million house, Louise. You have an agreement with a tenant. The agreement says over the next 6 months, they agree to pay you, let's just use $500 as an easy number. So they're agreeing to pay you $500 a week. Now, Louise, can I ask you this, and you tell me what you think? If your $1 million house over the next 6 months goes down in value, and let's say it's valued 6 months later, $950,000. I want to ask you now, Louise, I'm putting you on the spot, forgive me. Have you lost 50 grand? You paid $1 million for it. It's now worth 950. Have you lost 50 grand on that property?
Well, technically not until you sell it.
Thank you. Well done. The $500 a week over the 6 months, is that money sitting in your bank account? Is that your cash flow?
Yes.
6 months later, your property is worth $950 and the tenant moves out. What do you do now?
You get another tenant.
So you were looking for another tenant to go into your property. You're doing another agreement. Now, 6 months later, the rental market may have come down a little bit because the property market's come down. Your agent, your real estate agent says, Louise, this is a nice property. The market's come down. We were getting 500, but at the moment in the current market, we can only get 450. Are you going to turn around to your agent and say, no, I want 500? Or are you going to say, give me 450 because something is better than nothing?
Yeah, I'll take it.
Okay. So your house is worth 950. You haven't lost anything because you still own it. There's no physical loss. Does that make sense?
Yeah.
Let's go to the stock. Let's go to the stock market now.
Yeah.
Louise, I'm going to use some easy numbers. You bought Microsoft, and I'll just use $100. I don't know the price of Microsoft at the moment, but let's just use some easy numbers. You've bought Microsoft for $100. You've put a contract in place for a month. And you've agreed to sell your Microsoft shares to someone in a month's time at $100. And let's just say they've paid you $5 for that month on your $100 investment for that contract. Now, these are just made up figures. So people are trying to calculate what the return is. Don't worry about the return for the moment. Just understand the concept. You've bought your shares for $100. You've got a contract in place for a month. They've paid you $5 for that contract. Is that $5 sitting in your bank account from day one? The answer is yes. A month later, Louise, your shares, your Microsoft shares are now worth $95. Make it 90. Let's make it 90. You received the $5 in premium from day one at the beginning of that month, correct?
Yeah.
Is that $5 in your pocket?
Yeah.
What can you do with it?
Spend it.
Okay, now I'm going to kick you out of your room. Do not say spend it. Get out. No, we're going to reinvest it.
Reinvest it. I knew that there was an answer there. Tip of my tongue.
Good answer, Louise. We're going to reinvest it. So your shares are now worth 90. Have you lost $10?
until you sell.
Have you lost $10? No, there is no physical loss until you sell. Do you still own the shares?
Yes.
Did you still make $5?
Yes.
Good. What do
But
you
the
do now?
overall, though, George, like if you take both trades into account, do you ever tell people to get out of that share that they're writing covered calls over?
First and foremost, when you follow proven practical principles that have been applied for over 24 years that have worked, first and foremost, a checklist that I've been using for 24 years, we're picking good quality stocks. Do you agree there are good properties to invest in all around the world, but there are bad properties to invest in bad areas all around the world? People won't go out blindly, or some people do. They won't go out blindly and buy a property in any suburb just for the sake of saying, I bought a property. They're going to do their due diligence. Do you follow?
Yeah.
Are you going to do your due diligence on the stock market to pick the right kind of stocks to do this strategy with? Because let me explain now. Let me go back to my scenario. Your shares are worth $90, Louise. You had a contract in place. The person's not buying your shares, so they walk away from the deal. You've pocketed the $5 they paid you. You've still got the shares at $90. What do you do now next month to make more money on the original investment of 100, even though your shares are now worth 90? You're going to go back into the market and you're going to create another contract to give you more income for the next month on the $100 that you invested, even though the shares are now worth 90. Because let me ask you this, when the market opens tomorrow, could those shares go back up?
Yeah.
But could they keep going down?
Yeah.
Do we know what they're going to do?
No.
We don't have a crystal ball. But why are we implementing this strategy? For cash flow. Because at $90, the way I teach you, we can go back into the market and create another contract to give you more cash flow on your $100 investment, even though they're worth 90, because you invested 100 and you're still going to make money. Now, are you going to make another $5 next month because you made $5 this month? No, because it all depends on supply and demand. Even if I make $1 next month, $1 is better than nothing. Let me explain this to you. I will just talk about Australia for a second. In Australia, we have the largest share ownership in the world. Australians have the largest share ownership in the world. How many Australians every single day are watching their shares every day go up and down, and they're just sitting on them watching their shares going up and down and earning nothing? Whereas we could be teaching them, Louise, how to use those shares, whether they go up or whether they go down, to implement this strategy, earn income off the money they've invested, because they're not earning anything anyway, and they've got the money in the market and they're doing nothing with it.
Loving it, George. Loving
And
it. Now, I just want to delve into a couple of areas here. Okay, so
Cool.
let's look at the things that George and I are saying that are similar. I want to emphasize this. Firstly, George is working to a plan. This is based on market data over a long period of time. He's got rules that he's following. Now, even if our rules don't fully correspond, that's okay, because barely any trader's rules correspond. It is what suits the mindset, the risk tolerance, and the appetite of the trader getting involved in the markets. Also, listen to how specific George is being. There are specific things he knows and that he is doing to derive that income from those shares. So, sure, I mean, it's been fun because I know you quite well, George, that I'm fine to have a little bit of argy-bargy on the show, but I want everybody listening to know that they are the commonalities. They are the similarities between the way George approaches the market and the way I approach the market. So we're still remembering we're aiming for cash flow and wealth creation. Now, how you get there, those strategies, that is quite specific to you, and that is something that you can be mentored into. But remember that overall goal. Don't lose sight of why we're traders and what we're trying to achieve, because the specifics can be taught. I'm right, aren't I, George?
Correct.
Nice.
Yes.
Yeah. Now, George, I could talk to you forever, but we are going to have to cut it off. I am loving your enthusiasm. I'm loving this intellectual discussion. And George, everybody needs to know what the next step is. How can people stay in touch with you?
Before we even get people to stay in touch, can I just talk about one thing that we haven't spoken about, if that's okay? Please
Absolutely.
forgive me. In fact, I want to talk about two things, if that's okay.
Do it.
The biggest thing people need to, well, there we go. There's some balloons. I don't know what's going on there. The biggest thing people need to understand is this. You've got to be in it to win it, and you need to make sure you've got, multiple streams of income. Covered calls is a cash flow vehicle. By having a cash flow vehicle and having your money working for you and some cash flow coming in, you need to have the right trading plan, because then you need a 3 to 5 year plan. You need a long-term plan. So by having cash flow and money coming in, you're using that cash flow with what Louise is teaching in regards to the mentoring to understand investing long-term. So you're diversifying. You've got diversification. We use the cash flow to diversify back into the markets. Then we use the profits we're making to go back into property. So we're diversifying. We're using property as well. Going and buying property, paying down our home loans, getting equity, using equity to invest. This is the biggest thing. When it comes to investing, the one main thing that a lot of people are scared of, and the biggest fear that they have, is fear of losing money. And I'm sure, Louise, you will agree with this. And the one thing we didn't touch on, and please forgive me for this, I do want to quickly just touch on this, and I know we're running out of time, is understanding how to protect your capital when it comes to investing in the markets. Money management, risk management skill sets are paramount to keep you in the market long term. We are not cowboys or cowgirls. We are not here for a quick fix. We're not here to put $500, $1,000 into the market and try to make $1 million out of it. It's not going to happen. Slow and steady wins the race, but we've got to be in it to win it. I also teach my clients all around the world how to protect their money the moment they go into the markets. So the one biggest key factor when it comes to covered calls, forget about what the returns are and that we're making money from day one, because that's the biggest thing you're looking for, a return. I want your money, and Louise agrees with this 100%. This is what we spoke about. We both want your money protected at all stages throughout your investing. And with the covered call strategy, you will be protecting your money between, and listen to this very carefully, your money in the market. When you go into the market and enter a covered call, your money will be protected between 90% up to 99% of your capital that's invested. And so that is a key for you to be in the market long term, to have that sleep at night factor, to know your money's invested. We are investing in the US market. We don't need to watch the markets, and your money is protected. Very, very important.
Loving it. And George, really, this is why we bond as well, because our values are so akin. So what is the next step for everybody listening?
If everybody wants to know more information, in fact, as a bonus for coming and listening to us all the way to now, you can see my book at the back. I am selling my book. I've recently written the book. I am selling it. But as a bonus to say thank you for being here and listening to us, I want to give you the book for free. So there is going to be a link. You'll be able to click on that link. I'm also going to give you my 35 secrets, what I call my 35 secrets to health, wealth, abundance, happiness. Very, very important. My 35 keys, my 35 secrets to all this sort of stuff, I want to give you free, as well as my book, as a thank you for coming and listening to Louise and I. And Louise will provide you with that link. And
I will. So that will go into the show notes. So to access those show notes, come to my website, talkingtrading.com.au, because George Fokas is on the show. If it's not the current week that you're listening, do a search for George Fokas, Fokas, on talkingtrading.com.au, and I'm going to get you those resources. George, you're an incredibly generous man. Now, that is one thing that we didn't discuss, is how we met. My beautiful, probably my best friend in the entire world, because I've known her for so long.
That's how she describes you.
Dawson. I just love that woman. Christine Dawson, to me, is so special. She's done my mentor program. She's a top trader. She's a scientist by trade. So her background is specific, structured, logical thinking. And Christine was my unsung hero with this. She introduced me to you and you to me. And I just love the fact that you took Christine. You just give us a little précis about your trip with Christine and your other students, because this, I think, is encapsulating the lifestyle that traders really need to aim for.
Trading is not just about making money, because making money is one step. People always concentrate and focus on the money. It's not the money that we want, it's what's money going to give us. Every year, I take 30 to 40 students from all around the world to Greece in September. I take them to the places that my family and I go to, the places that we eat at, the beaches that we visit that aren't touristy. And for 3 weeks, 20 days, we are traveling, we are trading, we are making money. They get to see me, they get to sit with me, they get to see me in the raw, and it's all about making money. And last year, I took Christine and 30 other members to Greece, and I can tell you 2 of my members made exceptional results. All my students, all my members that were with me were making money, but 2 made exceptional results over a 3-week period. One did 38,000 in 3 weeks, and another did 18,000. And then others were doing in between that and a little bit less. But the biggest thing is this: networking, because trading can be boring. We're sitting at home in front of a computer. Well, I teach my clients all around the world to travel and click the buttons anywhere. So taking students to Greece from all around the world and getting them like-minded, getting them to see how I think, how I trade is very, very important. And Louise, I'm going to look at opening it up to your members with you, and we're going to do a trip together, and you're going to get a group of your clients and a group of my clients. And what we're going to do is we're going to build a joint program for cash flow and long-term investing with a proper trading plan in between. And I think we're going to do this. But we talk about Christine, because Christine was a good friend of yours, and you actually referred her to come and do my program.
I did.
Christine 2 days ago sent me a message, and if I can just quickly read this before we finish off so people can understand. I'm teaching you cash flow, whether the markets go up or whether the markets go down. So a lot of people are thinking, but if the market goes down, George and Louise, how do we still make money? But this is what I want you to understand, because it's direct from Christine herself, from a trade that we did and what I taught her in Greece last year. She says, "Hi, George, just wanted to tell you, I finally got out of a particular stock this weekend." So she bought it in April of last year. So she's had this stock, just so you can understand, she's had this stock for 10 months. Earning income on a monthly basis. She says, I bought it for $41.51 and I sold it over the weekend for $29. Bought it for $41.51 and sold it 10 months later for $29. So when people are thinking about that, you bought a stock for 41 but sold it for 29. She made a 17.15% profit. I'll just say 17% profit on that $41 investment and sold it at 29. How? The income that she's been earning over that 10-month period, even though the stock went down, she's made not only the difference in the capital, but a 17% profit in addition to the drop. Now, do you understand the power of covered calls? Even when the markets go down, it's all about the cash flow.
And you can only do that in the US market, because the Australian market can't tolerate that. I can tell you from personal experience, if you are trading Australian options, you need to exit at a stop loss, because you are going to get filleted, because you're not going to make enough income on the covered call side.
Yeah, the results and the returns are very low in the Australian market. Correct. It's not liquid.
Exactly. So you can read my book to get the knowledge, but don't try to apply the book now to the Australian market. Apply it to the US market with George's help. George, you have just been superb. Thank you so much for trusting me to come onto the podcast. I know it is a leap of faith, and I just adore you and what you are doing. And congratulations on all of your success. For everybody listening, tune in to talkingtrading.com.au. Look up George Fokas, Fokas, to get these freebies that George is offering. They will be in the show notes. George,
anybody wants any more information, they can go. I will give them a specific link. So for a special bonus from you, and we'll put that in the show notes as well. If they want to know more, or any upcoming events or anything like that where I'm explaining the strategy, they can do that, or they can look me up at Fokas Beyond as well. Thank you very much, Louise. Thank you so much. I appreciate this opportunity.
Beautiful, man. Now, until next week, I am Louise Bedford. This is the Talking Trading Show, and this is how traders excel. I will see you next week with another guest. Bye for now.